Tonight, I just want to go over a couple of wave formations to start looking at it. What I have noticed is with all the students, when I ask show me the wave formations, almost everybody has problems identifying them. So I want, and by the way, the two most profitable patterns that I've used over the last 30 years have been wave formations and specific candlestick formations as well. So the wave formations are the one way to get in really at good prices and where you let the market come to you instead of you chasing the market. So I want to show you one here. This is euro dollars, and this is a weekly chart. So here's how we start. Here's the bottom, and then we come up, we stop, and then we come back down. So this is a 1 right here. The top of this candle is a number 1, and I'm going to get the number on that. The high of that candle is 844. I don't put the 1.0 and all that other stuff. It's just know that that's 844. And so 844 is the high, and that's the number 1 point. We come down to here, and there's the lowest point of number 2. So that's 1, 2, and the low there is 498. So you take 844 minus 498, that's 346 points. So it traveled from the highest point here, number 1, down to the lowest point here, that's number 2. It traveled 346 points. So then we come up to the number 3 point. By the way, the 3 point is always higher than the 1. So here's the highest point of this candle here is 949. So 949, it came down, it started coming down, and then it came down to this lowest point. So this would be the number 4 point. So there's, and by the way, so we would take 949 and subtract the 346 points from this wave. So in other words, this was wave 1, 2, so that's 346 point traveled. We take the high there and subtract 346. So we take 949. Let me get my calculator out. 949 minus 346. So we would be looking to buy at 603. And the low there is, hold on, no, I've got to make a mistake here. 346. Well, wait a minute. Let me just check my numbers again. 844 minus, let me make sure here. 498. Is that it? 346. Yeah. And then let's take this again. 949. Is that high? Yeah, 949. 949 minus 603 minus 346. 603 is not the number that I'm getting. Let's see the low. Yeah, so, and the low there is 604. So our entry point was 603. So once you get to 604, you know you're getting, I mean, you're there. And so that's your buy point right there. So you buy at that level, and then you ride it up past the number 3 point. This is your top of your 3. Anytime you get above that point, you now start looking for a reason to get out. In this case, we probably would have gotten out halfway down this candle, and then have to look for another way in if it continues up, which it did, by the way. But I'll give you an idea from point 603 to, let's say, somewhere a little bit above the number 3 point. we'd be at 10, let's see, yeah, 1023. That's the 1026. So that's about 420 points. Each point is worth $12.50, about $5,200 right in here. And that took you roughly 1, 2, 3, 4 weeks to make 5,250. And a contract of euro dollars is going to be about $2,200. So you can see the returns on getting in on the bottom of one of these waves is substantial. The money can be made. So that's where I've had some of my biggest winners. All right, let me show you another one. And those of you in the oil and gas business will want to look at this. Let's see where we got it. So I met with Kevin. When did we meet, Kevin?
Last Friday.
Yeah, last Friday, Kevin Corbin and I met. And I told him oil was going to $75 a barrel, and then from there to 107. And by the way, this is because the Saudis are trying to come up with the IPO, the initial public offering of Saudi Aramco. And they are trying to drive the prices up to $100 a barrel. So they're doing all kinds of things underneath the table to make that happen, they're spending money to create wars in different areas so that there's instability in the Middle East, which helps drive up oil prices. But if we look at a long-term, this is a monthly chart on oil, we can see, now we could use these intermediate waves, like in other words, do a wave from here from this bottom to that top. That gets me about $75 over here. But the big wave, here's here's the top. We come down, here's a wave 1 to 2. And so the bottom of this wave, this is a long-term wave, is roughly, what is that? Low is going to be, what is this? I'm not getting that. 1, 2, what's the low? So I'm going to guess the low is around $33 there. And the high up here is going to be roughly about 114. So you take that 114 minus 33. That's $81. So from this bottom to this top is $81. And so we're coming down. So we started, and by the way, you could have drawn a trend line here, and this is where I caught it. This is where I was able to call oil going down to $30 a barrel. Across that trend line right here, and then the bottom fell out. But now we come down to the bottom of wave 3, 4. And by the way, the 3 point is always lower than the number 1 point down here. So this is lower. So this is a bottom here. So we take the low of that candle, which is roughly $26 a barrel. And we add the 81 that traveled from here to here. So if you put 26 and 81, guess what? It's, what is that, 107? So that's longer term wave, and with the Saudis trying to do it, we'd be looking at 107 is the top up here of the wave. But I was predicting 75 easy, and this was last month. I was predicting 75. We'd hit 75. And then from there, we might consolidate a little bit, and then the next wave would be up Texas. Now, the challenge is we'll hit 107 most likely, or somewhere near $100. But it will go up like this. And anytime you see something go up almost at a 90-degree angle, guess which way it goes when it comes down? 90-degree angle coming down as well. And it usually comes down to the same level roughly where it started. Here was the starting point down here, and you can see it came down to this level. So I suspect that we will go up to 107 real quick, and then from there the drop would be significant from there. And you know, at 107, all the shale operators start, you know, pumping a lot more, you know, putting a lot of more product into the market. And so that alone will drive the prices back down again. So this is pretty much artificially created. It's not a supply and demand function. This is basically an artificial, yeah, the Saudis, Saudi royal families pay for everything for their citizens, and they need money to pay for all these social projects. And with oil at $60 and $70 a barrel, they're not making enough money to fund all of their social programs. They don't want their citizens revolting against them, so they pay for everything over there. And they would like for the Saudi Aramco IPO that they're trying to come out with, they're selling off 5%. They estimate that at $100 a barrel, they could generate almost $1 trillion, and that would pay for everything. So that's their goal, and that's what they're trying to do. So the charts will tell us if this scenario changes, but right now that's the most likely plan right now. Contract of oil is about $3,500 a barrel. You can also buy a half a contract, $1,700. Or you can buy call options or the oil equivalent, which is an exchange traded fund. So it's the stock equivalent of crude oil, and the symbol is USO. Let me go to it. Let's see. So there's a number of ways of playing oil. Let's see that. And let's see. And get this. So here's the stock equivalent. This is all weekly to the oil, the prices of oil, and you can buy options on this, or you can buy the stock outright. And this tracks the prices of crude oil. And I'll give you the daily chart on this. All right. So you can see now, this did have a down candle today for most of the day, but you can see it recovered when Trump said we're going to get out of the Iran deal. And so there's probably a war brewing between Iran and Israel, which will keep a lot of instability in the Middle East. And so that will continue to drive prices up higher. So that's what we're looking for there. So you can also do the wave formations on stocks. Wanted to show you one here. Here's American Airlines, and it will start with, and again, it's identifying these waves. Here's a bottom, it goes up, comes down a little bit, goes up some more. So this could be a small 1, 2, and a 3, 4 here. But they're fairly small. I mean, this is a weekly chart, so you know they are more than symmetrical. But we're looking for the big one. The big in Elliott wave theory, they call these impulse waves, which are the bigger waves. So if you see the top of this wave here, you can see from there to there would be a 1, 2. It's a very significant wave. So let's take the top of this wave. And I'll disregard the pennies on this, but it's $50.64, but I'll just say $50. And then the bottom of this, the lowest point of this candle here is going to be a low of 39. So let's take 50 minus 39. Let me see how many points that is. And that's our first wave. That's 11 points. So then we come back up, we make a high here, and the high there is 54. And so we take 54 minus 11. Then our entry point would be 43. Okay. So as it starts coming down here, we're looking for $43 a share to get in. And right about, let's see, what's the low of that candle? The low of that candle right there is $42.67. So you can't get any closer to 43. All right. So your entry point was 43. And by the way, the best way to do this is to just go ahead and buy it at your entry point. Right. It may come down lower, but typically you can put a fairly small stop loss there because it's already down at the bottom. And look at stochastics, it's low, and then they're already starting to roll up. So you're actually getting in at a very good price, and you're waiting for the market to come to you. Instead of you chasing the market, you're waiting for it to come down to your number, and once it hits your number, you get in at 43. Now, it did go up, came back down, probably would have scared you, but eventually it did go up to the number 5 point. So remember, this is 1, 2, 3, 4, and remember 3 is higher than 1. And then, so here's your 4, and then the 5 point is always higher than this, than 3. So over here someplace is where your exit is. And by the way, you can see that we've now formed a wave 1, 2 on American Airlines, and we're waiting for a wave 3, 4 to form. So all we have to do is take this distance here, and when it stops and starts going up, it will go most likely about 70% probability that it will travel this distance from this bottom to that top. So when it stops here and starts going up, we can project where it will go to, and that's where we want to set our sell short point. Or we would buy put options, one or the other. All right. So we can do it in stocks, we can do it in commodities, we can do it in foreign currencies. It doesn't matter. These wave formations, I want you to start practicing identifying them and get in the habit of looking at them. So you should be on your charts drawing trend lines first, and then you start logging in your how many of these waves have been established, and you're looking for the waves that are similar or symmetrical or very equal to each other. And my experience has been that about 70% of the time they are equal. That doesn't ever, it's not always, but it does hit very regularly, enough for you to make money consistently when it hits your wave. And by the way, it does, I want to show you gold because I did gold last year in May. Let me see if I can get a gold contract up here. And I'll show you exactly what I did and why this scared me, but eventually it worked the right way. All right, this is a weekly chart of gold, or May of last year. Okay. All right, so because this is a weekly chart, I was looking at this way. Here's your bottom. It went up 1, 2, and then I came up to 3. So I went in right in here, right about in here is where I went in. Well, this is a weekly chart, so this is a lot of money on one of these candles. But so I went long here, expecting it to go up, because I thought, okay, here's 1, 2, and now I was at 3, 4. So I got in right in here, and boom. I'm sorry. Yeah, in here is where we got in, and this thing started going up. But I was down $2,500 on the contract in here, but then it finally did go back up. Yeah. Question?
Yeah, you You said you were doing gold, right?
Oh yeah, I'm sorry. This is oil. Sorry. Okay.
GC.
Slash GC. Okay. Very good. Thank you. All right. Where's May? May of last year. Here it is, right here. Here it is. Okay. So here's 1, 2. Here's 3, and I got in right about in here, but I was down $2,500 on this thing. I was sweating bullets. Now I didn't put a stop in because I thought I was going to be right. And by the way, that's probably not the best thing to do. And eventually it did hit the bottom here, and then it took back off, and then I was able to get up out right up in here. So made pretty good money on that thing, but it had me worried for a while. Okay, so did make a little bit of money, but boy, it had me worried for a long time. So I'm not recommending you trade without a stop loss, but I just happened to do it that time because I thought I was right. And by the way, the minute you think you're right in the markets, guess what? It usually comes back to haunt you. That you're going to get hit on that thing. See if I can. I think we had another stock last year that also had. Let's see. This is weekly. Oh no, let me see. This was another one. This is a little harder to detect, but again, it's training your eyes to look at that. So if you look at this, here's your bottom. You come up to this high up here, which is just from a dollar standpoint, that's 219. So let's just say 219 there. And then you come down to roughly, I'm going to say this is the lowest point there. And the low there is 203. This is FedEx. So what is that? $16 a share that it came down. And then when we come up to here, I don't know if this is symmetrical, but it's going to be close. 231 is the high there. So 231 minus 16 is our number. That would be our entry point. And sometimes it's not going to get exact, but once you start getting close to that number, you want to start looking for a reason to get in. The bottom of this is 214. So 215 was our number, and it hit 214 was the absolute bottom. So had you got in at 215, you would have been out. I mean, you would have gotten in at $1 above the lowest point. And then, of course, from there, so this was your 1, 2, this was your 3, 4, and then anywhere above here is when you start getting out. As soon as it crosses the number 3, the point right there, you're looking for a reason to get out. And so you look for, it's either a candlestick you don't like, or stochastics start rolling over, or you draw a trend line and it crosses below the trend line. So you look for a reason to get you out of the trade. Okay. And you can see most stocks are forming the 1-2 formations on the way down. So I'm thinking the stock market is not going to make new highs here. We're trying to make new highs, but I'm thinking the stock market is probably headed down from here. We may try to make one more stab at highs, but we're not going to make newer highs anymore. So this is we're getting ready to come down longer term on the stock market. So these are wave formations, and by the way, we can play them up or down. Doesn't matter. Waves up, waves down. For us are good. This one, again, on FedEx, we're going to be looking for 1, 2 here. So we're looking for something to go below this point, and then form our 3, 4 up, and then short it on the other side. So those are things that we're looking for in the market. So we're going to start the Tuesday night call again. And so if you've got different items to look at, let me know, and we'll start looking them over. And I'll just be covering, like tonight, one specific lesson, but I want you to spend some time on waves. because when those entry points, you can see the entry points are very, very close when you get the symmetrical wave. And what I like about the wave, as I mentioned before, you're waiting for the market to come down to your number or to go up to your number. So you're not chasing the market. You're waiting for a very specific number to get hit, and that's your entry point. And normally, it's pretty close to the exact bottom or top where you need to get in. So your stop losses don't have to be very far to get out if you're wrong. Okay. So anyway, I'll open it for questions and then we'll close after this. It's already going to be 7:30. Any questions? All right, so I'll send you the invite for next week. You've got my number. Call me if you've got some things that are pressing, and let's start getting together again on a weekly basis to start making money again, okay? All right. So thank you all for being on the call, and I'll talk to you next week.
Thanks, Roy.
Thank you.
Thanks.
Yeah,
Take
bye-bye.
care.
Thank you, Roy.
All right, thank you.